This in itself is a strategy. You don't need to do much more than this. If you can trade like this consistently, and you can see these liquidity sweeps, and you can enter in off the back of them over and over and over again, you can see here, you can get yourself into some really, really profitable trades. Welcome back, people. If you're like me and gone on a deep dive into your YouTube Forex education, you'll have probably come across liquidity sweep trading strategies. I've got a lot of them on my channel. The problem is people don't know how to trade them effectively, and people don't know what makes up a liquidity sweep, how to spot liquidity sweeps, ultimately how to trade them effectively. So what I'm going to show you today is a few tricks to differentiate between liquidity sweeps and breaks of structure, because that's one of the confusing points. I'm also going to show you which liquidity sweeps you should be trading off the back of and why you should be trading off the back of them, and teach you basically how to stay on the right side of liquidity sweep trading, because it's difficult and there's lots of misinformation out there. Now, I've just released a brand new course, a 2024 mentorship. If you're interested in finding out about any more about how I trade and how I teach my students, then pop me a message on Instagram at StrongMoneyForex, and you're going to see a little advert on that later on. But before we do anything else, and as a massive favor, if you could do one thing today, if nothing else, hit that subscribe button and help me grow my channel. Cheers. So, liquidity sweeps. Now, liquidity sweeps are difficult to understand because you kind of get them everywhere. And when you're first trying to trade liquidity sweeps, it's really difficult to understand what is a sweep, what is not a sweep, what is a break of structure, and the differentiation is actually quite easy. Okay, momentum is a big part of it, so we want to be taking these in line with the momentum of the marketplace. Let me tell you why your Forex strategy does not work. 95% of all Forex traders fail. This is partly due to the fact that you're rubbish at following basic rules. You all know who you are. But also because 95% of all trading strategies are flawed. My name's Czech. I'm the founder of Strong Money Forex. I've tested almost every strategy in the marketplace, and I've built over the last 8 years a smart, simple, easy to learn system that's taken the best bits from everything out there. Now, I want to reassure you, it is not your fault. Strategies you see online are oversimplified, heavily marketed garbage. The good news is I've spent years working out why so many traders fail, been one of those traders, and I've used those strategies with something that's been under your nose all along. You may even be using it right now and not even realizing how important it is. I'm currently, literally as we speak, building my 2024 mentorship course. As an early bird special, anybody who signs up using that link below will earn themselves lifetime access to my coaching and my mentorship course. A free one-to-one coaching call with me. The best part is at a massively reduced price of just £49. You will never see this course at this price ever again. For example, if the momentum of the marketplace is bullish, we want to be looking for sell-side liquidity sweeps. So these ones here, we're not that fussed about because we've got bullish market structure. And when you're more likely to find a liquidity sweep is where price is going to struggle to get down to. So when the market is bullish, you probably understand that there are more buy orders in the marketplace than there are sell orders. And whilst there is an up and down to the marketplace, the momentum is bullish, and therefore it's easier for price to break bullish and it's harder for it to break bearish, which is why when you see these sweeps below bearish external liquidity points like this, you're much more likely to trade them effectively. And so one of the big tweaks that you can make is don't look for liquidity sweeps absolutely everywhere. Only look for them in the right market conditions. And if your market is bullish, you want to be looking for sweeps on the sell side of the bullish price action. So in this bullish marketplace, if I tried to sell these liquidity sweeps, you might have some success with some of them, but you notice that most of them, if not all of them, will ultimately fail because the market is bullish and therefore wants to push bullish. So selling into bullish market conditions, I mean, well, it's, stories all the time, isn't it? You're ultimately doomed to fail. What you will find, however, is if you do this in the opposite direction, okay, you will be able to find yourself in multiple trades that will pay you your dues. And you can get a nice 5R out of that one. You can get, what's out of this one? You can get yourself a nice Ultimately, you get up to 5 hour on that one as well, which is great. I'm only ever looking for about 2 anyway, so these are all fantastic trades. So the first thing that you need to do before anything else is you need to understand where the momentum is in the marketplace. And you can determine this a couple of ways. You're going to be looking at kind of impulse and correction. Where is the market moving impulsively? Is it moving impulsively bullish and then correctively pulling back? If it's moving impulsively bullish, then correctively moving back. Look at the time it takes to make bullish plays, like this one here. It took 4 days, whereas this bearish play, it took 8 days to make a similar sort of move. Whereas this one is really, really bullish, and then a really slow corrective move back. And then we have a nice liquidity sweep there, which we could trade off the back of. So be aware of where the momentum is in the marketplace. And then as soon as that momentum shifts, that's when you can start looking for the opposite. So now we've had a shift in that momentum. Now we can start looking for liquidity sweeps on the bearish side. And then we're much more likely to get into trades that are going to hold. So momentum is really, really important. Some of you call it trend. I call it momentum. I don't really like the word trend because trend adopts a mindset that you have to follow it religiously, whereas momentum can change quite quickly, like as you can see it has done here. Now that momentum has changed, I'm going to be looking for more liquidity sweeps and I'm going to be getting to more buys. So momentum is really important to understand because that's the first hack that you're going to see. You need to be making sure that you're trading in line with the momentum. The other thing that's really important, and you know, it's very, very simple. Look at the formation of the candles and look at how much time price spends above or below liquidity points. For example, if I just get rid of these here, look at how much time spends above that liquidity area. Okay, I probably can draw it better on actually with the box. Okay, look at how much time price has spent above that liquidity area. Spent a long time, right? It doesn't look like it's going to come back down. That's because it's probably not. And if it does come back down, it's probably going to create structure for it to go further bullish. Whereas when you look at this one here, look at how much time that it spends below. Look at how much time this one spends below. These are hourly candles, so it's not spending much more than an hour each time. This one spends a little bit more time, but look at the immediate reaction, okay? So push down and then it immediately reacts. Whereas this one, they continue pushing up. So looking for closes of candles can be an important one. So looking to see whether the candle closes before you get into it. And, you know, if you see this one here, for example, we've got 2 wicks there. The other thing that I'll always pay attention to is how many candles stay below the liquidity level. For me, whatever time frame that I'm on, if I spend more than 3 candles on whatever time frame below my liquidity area, I'm not interested in trading it. And if I get a big close with imbalance left behind, I'm not interested in trading it. So that's a good example. Big close with imbalance. That's a good example. Big close with imbalance. The candle has pushed up past the liquidity area. It's closed well outside the liquidity area. And you can just kind of use common sense in these scenarios. So what I want you to start doing is looking at the charts, okay, and you can build a strategy off this, looking at the charts and looking for where the momentum is in the marketplace. So right now we can clearly see that the momentum is bearish. So if I see any liquidity sweeps, I'm going to be looking for price to sweep liquidity. I'm looking for it to not spend much time or close above. Ideally I want 3 candles, but that doesn't have to be absolutely necessary. And then if that happens and it closes back within, you can enter off the back of it. Same thing here. We've got a liquidity sweep there. We've created 3 candles, okay, and then we've closed back within the liquidity level, okay, and then you can sell off the back of it. We've got another one here, okay, that's just 1 wick. You can then sell off that candle, okay, and this in itself is a strategy. You don't need to do much more than this. If you can trade like this consistently and you can see these liquidity sweeps and you can enter in off the back of them over and over and over again, you can see here you can get yourself into some really, really profitable trades. Every single one of these trades, because the momentum of the marketplace is bearish, has got out 2, 3, 4, 5R. And you can do this over and over again. Now the difficulty comes when you've got sideways trading marketplaces. When your market is trading sideways, you know, and it's going kind of wiki up, down, up, down, up, down. That's when it's difficult. When you've got clear bearish momentum like this, it becomes a lot easier. But start using those things. Start using those things to get you into better trades. You want momentum. You want clear momentum. You want to be looking at the marketplace and seeing, right, the momentum is clearly bearish. And with that momentum, you're looking for a liquidity sweep where the candles do not either close outside or spend much time outside the liquidity area. They want to sweep up and sweep down. The key's in the title, really. It wants to literally be a sweep. Once that happens, you're going to enter in off the back of it. You're going to hold down to a low, hold down to a next low, and see where you end up. And, you know, as you can see from these trades here, I've just drawn these on quickly, but with some planning and analysis, you can build yourself here a really, really profitable trading strategy. And then we'll do one final one for luck just here. Let's pop that one on there. Spent no more than 2 candles above. Stop above the high, hold to that low, 4 are done. So, if you enjoyed this video, do me a massive favor, pop that like button. If you'd like to find out more about me or my trading strategy, hit me up on Instagram at StrongMoneyForex, and I'll catch you in the next video. Cheers.